we're going to go to the newsletters tab. When we go there, we're going to go to the first column, second row. You're going to see the opening call by Basil Chapman. Now, we've had a lot of subscribers recently to this, and everyone seems to really be enjoying it. I think this is a very thorough newsletter. At the end of the week, I think is either Friday or Saturday, Basil can clarify that, but he usually does a long-form video kind of explaining what's going on, what we looked at, what he's going to be looking at. Additionally, once you subscribe to the opening call newsletter, you get access to Basil Chapman's subscriber webinars, which are fantastic. The one he just did recently was November 14th. This was Thursday, about sector rotation, former out of favor, big losers, becoming big winners. I wonder, too, if it might be time for another one, because I love myself a Basil subscriber webinar. Seriously, check it out. If this is your first time, you can do this risk-free. We have a 30-day money-back guarantee on all of our subscriptions, so for whatever reason it doesn't work out for you, you can't get your money back. We are betting that it will. Basil Chapman, how you doing?
Hi, Jacob. I'm doing well. Thank you very much for that. I appreciate it.
Absolutely. What are we taking a look at today? We're looking at the Dow right now, I see.
Let me go right from the beginning. So the Dow, this is the daily chart on the left. In the middle is the weekly chart. On the right is the monthly chart. So the Dow, on Sunday night, when I put all the numbers together, and when I looked at Chapman wave methodology and what I was anticipating from the high VIX reading, volatility index reading on Friday, it seemed to me that it would be appropriate to consider adding to the long position. We've got long positions from 2020 and 2022 in the Dow, some aggressive, and I wanted to add to a trading position if it was appropriate. So my intention was to see on Sunday night how the futures opened. Mm-hmm. And that gave me an inkling to say that, in our references, if you're in the market a very long time, decades and decades, you've seen many bear market turnarounds where the market makes a low and how it makes a low and what happens to the VIX. But in this particular instance, my anticipation was that Friday somehow, even if the futures were up, somehow or other, the VIX should rally, and then at some point, the Dow should have some kind of a rally, and then the best would be if there wasn't a minus 400 or 500 points in the Dow down and the volatility index up in the mid-20s, then this is like a subordinate rally that I would anticipate. So the plan was that we would buy before the open, which is what we did. We bought the Dow at the very low. The low was 41,844. And we had an aggressive trading position, and that's all it was. And I said the best is if there's a rally, and in my show that day at 10 o'clock on Monday, I said if there's a rally, and I'd like to see the rally kind of fail for a little while, and then for people who thought, oh, this is the low, say, oh, no, I'm out, I'm done. And then for the market, the Dow to lead, but I would like the whole market to close at the highs. That's exactly what happened yesterday. So, with that said, it wasn't enough. You can't just have a one and done. We've seen that quite a couple of times now where it looks like something's happening, but it's really just a one-off thing and then you go back to normal. So we've just seen the exact same thing happen twice today. We had the futures up very sharply. The Dow then went up all the way to 42,544. Yeah. It hit the pink 9-period moving edge. I'll talk about that in a moment. And then it pulled back, and then there was another rally which went up again, and now we've pulled back. We went minus just a moment ago. Now we're up 41. So this is going to be a fascinating thing. I'll talk about it when we return.
Absolutely, Basil. Please stay right there, folks. We'll be right back with Basil Chapman right after this break. Welcome back, everybody. This is Jacob Shoup. You're watching the Tom O'Brien Show. I am joined right now by Basil Chapman. Basil is the author of the Opening Call newsletter. He's also the host of the Tiger Technicians Hour on every day that the market is open, right here at TFNN, 10 a.m. Eastern Time. Basil, before we went to the break, we were looking at the Dow, maybe some potential setup that you're looking for in it.
Right. So the ideal setup is when you get a V-shaped bottom, like this, the day before the election, the market made a low, the next day it just soared. Here's another one that was back in September. That's a V-shape. That's a fabulous pattern. This just takes off. And if you keep thinking, I'm going to get in, and the next day is an up day, and it gaps up, and then and finally when you get in, you get the sudden pullback, and even that, you're lucky to get in because it takes off. This is different. This is stair-step moment, and the chart itself actually doesn't look fantastic. The MACD hasn't crossed positive. The stochastic's down at 21%. I like it much higher than that, ideally up in 80%, but 21%, it needs to rally. And the 9-period moving average, I don't know if you can see it. This pink line's a little messy right there. This is because you had an H pattern that went to an M pattern and took out the left side low of 42,148 back in late December. And the rule for me with this arch formation is within 2 days, you have to close. Once you close below it, you've got 2 days in which to close above it. And that'll allow you to go to the next icon on the left. So let's call this a stair-step move. So the first thing that I need to see is that whatever the PPI report, whatever it is tomorrow that can trigger any market reaction, either takes us off to the upside and takes out today's high of 42,544 in the Dow. And the reason why I mentioned the Dow is we've had this huge rotation, and the Dow kind of led the way down, the IWM and the Russell 2000 and the Dow. Now I want to see some stability as some buying comes into the Dow-type stocks. Dow 30 is a very mixed. Got the banks, has got a whole bunch of things like that. And maybe we can still see the semis take a breather. That's what I've been anticipating as I spoke to you for over a month now. I've been saying there's a rotational correction coming, and how it unfolds, because the weekly charts, the 9-period moving averages are all still very strong, and that says there's internal strength. So just to make it as simple as possible, if by Friday the Dow is able to close about 42,700, hopefully higher than that, that's a really good sign short term, and I'd have to treat this as a short-term counter-trend rally at the moment. That'll be positive. Then I've spoken to you about Robinhood for quite some time. We were fortunate enough to get it in that low in August at 16. It ran to 43.83. And this, to me, is a bit of a clue to the general market right now. And that it goes together with Bitcoin, which we are still long. If Robinhood goes to a higher high, an all-time high, then the 47.84, that was the last high that was made the month after the IPO, where it made an 85 round number high, August of 2021. That's kind of a target for me. So I'm going one step at a time. This is a leg C, made a recovery high above the previous high. So this is very important to me because it contains a lot of things. It contains a little bit of the gold factor, a little bit of the Bitcoin, plus the brokerage where the public is in the market. So this is important for me. In the sense that if it continues to rally, to me, that's a positive sign. That's Robinhood. Definitely. And then we have some stocks that I've loved. I've said I don't really want to get out of them. We've managed to get into them very low down. They've done well. We've taken a little bit of, we've been raising cash, as you know, and we want to be putting it to work very selectively. Yes. But there are places, for instance, we've got a stock that we bought quite a long time ago. You can see way back here. This is Solventum Corporation, healthcare spin-off from Triple M. And we bought it way down here. That was in, I think it was November of 2024. And it's run beautifully. And look how it's held, even with the market choppy like this. It's right on the weekly 200-period moving average. So there are stocks that we have that I would like to add to. We did that today with one of them. And this is one we might even add to because we've got such a good position and we've had it as a trading. So I'm looking at this and I'm saying what has worked before that is holding well, stay with those positions because they're telling you under the duress of the market this time, if they are survivors, you want to stay with the survivors. Absolutely. Then there are stocks that have been very weak and have now started to find some support in like potash and different areas of the economy. And I'm looking at those. So we've got money that we want to put to work. At the same time, I'm not afraid at all to switch to a short position, but I'm being very flexible right now. Those weekly charts to me are really important. What is important to me is the TBT, which is the inverse of the TLT, the ultra short. This is ultra short Lehman 20-year Treasury bond ETF, just broke by a fraction the high that was made back in April at 38.68. It went to 38.98 today. I'm watching this, and I've been calling this a long time. I've been saying I see yields rallying. And that's going to affect different parts of the market. So this is a very mixed market. if you've got a portfolio and certain parts of it are working, stay with those sectors, because that's telling you that with the vicissitude of the market right now, you want to have something that has support and shows some strength. And there are some stocks that are just turning around right now that I'm starting to favor. And there are some more in the healthcare areas, and it's going to be a very interesting week coming up, because I think this is like a sieve. What falls through, you don't want to touch what holds. You want to use that and say those are the positions I want to be favoring.
Yeah, absolutely. And that last point you just had is exactly right. You know, at least this is kind of how I'm shaping up. I have a lot of cash right now. I was trying to get into that at the end of November and December, get out of some of the more, what I would assume, kind of riskier kind of equities. And, you know, I've been covering stuff like Nebius for a little while. DCO, just kind of started looking at them as well.
You've done a very good job of explaining them. I have been listening to you. I think that gives us a lot of education. It's very important. Thank you.
Thank you. And I think that, you know, these are being somewhat strong in kind of a rough market. So I love hearing that from you as well. You're taking a look at gold right now, I see, with the contract.
Yeah, so I want to, you've also got, sideways is a trading position. So if you do it very short term, obviously you can whip around up and down. But look, in the weekly chart of gold, it's not breaking out, it's not breaking up, it's just holding very nicely. Yeah. Sideways. If you look at the SMHs, the semiconductors, look at this, you think, oh my God, semiconductors are going to break. NVIDIA's pulling back. Look, trading range. Just the trading range. So I don't want to get too carried away here about, oh my God, the world's ending. I don't want to be saying, oh, this is Trump, and Trump always loves the market's going to the moon. You've got to be you want to be able to sleep at night, so don't get carried away. And not only that, there'll be plenty of opportunities. If this market suddenly breaks to the upside, you've got plenty of time to get into a lot. If it breaks down, then the weekly charts are going to say, this could last a lot longer. You'll have plenty of time to include new shorts if you are looking at shorts. I think this is a great time right now to be stepping back and being very specific.
Absolutely. And folks, if you're out there listening, maybe you've done very well in a super bull market, but now you're kind of not sure what to do. Really, this is the best time to check out the opening call newsletter. Again, you can do this risk-free. Really recommend it. Check out his subscriber webinar that he has. Again, you have the long-form video on Fridays or Saturdays. It is just fantastic.
I try to make it on Friday. I do about an hour-long comprehensive overview of what we've got, our positions, what we're looking at in the market, what I would like to add. It's almost like a little mini webinar like I had earlier in the towards the end of the year, yes.
Yeah, fantastic. And that's what I'm saying. And again, Basil, that hood call, I always just look at that in awe. Thank you so much for joining us today, Basil. We'll see you tomorrow at 10 a.m. Eastern Time.
Thank you very much, Jacob. Hope you feel better.
Thank you, Basil. Folks, stay right there. We'll be right back.